And it's big decision there. And you can see in that room, that is where that decision will be made. The governor, Johnson Asiama, will be sitting very soon, and we'll see where the monetary policy rate will be. Is there going to be a cut, held constant, or we are going to see a hike? We simply do not know. But one thing we know is that we have numbers to actually guide you and tell you where possibly the monetary policy rate will be. In studio with me is Winston Taki here on Beyond the Numbers. He's joining me on the Smart Wall. And we are privileged to also have George Wiafe, business editor at the Joy Business. He's also in the studio with us. And Alfred Appiah is a data scientist and a policy analyst. He's also joined us, a very, giant man. And I mean, guys, I mean, you saw that room, and if, AB could show us the visuals again, and it looks like it's a big decision day. 2026, this is going to be our first, monetary policy decision. I want to start with George because in terms of intelligence and covering this MPC meetings, he's got all the knowledge. Just look at the room, and I'm sure just by looking at the room, you could actually tell us something.
So let's go with what the Bank of Ghana governor has always been saying, per his words, and he says that they're going to work with data and they'll not be influenced by sentiment and pressures and all those things. What is the data saying about inflation? What is the data saying about the outlook for inflation? And if these things are anything to go by, I think that when the committee met this morning, they voted for a reduction. What we cannot see right now be the margin of the reduction.
Absolutely.
Again, sticking to what the governor has said always, that they're going to work with data. And all the numbers points to a reduction in the inflation, in the policy rate. But the argument to be that it's supposed to be a majority decision. So which vote would take the numbers to maybe a 200 basis point, maybe a 300 basis point, or maybe a 350 basis point. So if I work with the data, unless something happens, which it's impossible, the policy rate is going to go down.
Winston, you've been there before.
I've been there a couple of times, and it's interesting. If you read the transcript of the various people who decide on the voting and their reasons, the summary or reasons are basically economic fundamentals.
Absolutely.
And if you look at the same trajectory that has been sustained from 2025 until now, it's been similar narratives, especially the reasons behind why they make the inflation increasing. They are predicting further increase, or why the shortfall in the policy rate, and why basically the city is appreciating. They all put it into a summarized version, and we get to understand the motive behind the final decision or choices being made. And this time around, if we are to use the same trajectory in 2025, I'm sure the targets that were meant for 2025, we've met all of them as a nation. And if you look at the narrative from the central bank governor, consistently this year, every event, he's been quite optimistic about the outlook for 2026, and we're sure to see some positive optimism. He met the business community last week, and I'm sure there have been serious conversation about the implication of tax reforms and how it will reflect on the cost of doing business. And so certainly we are looking forward to some narrative going forward today.
Look at the gap between the policy rates and the inflation rate. 18%, 5.4. Now, that is a mismatch. Anyway, you want to look at it. But also, in trying to cut, you want to be very careful, because any steep cut, what could be the implications in terms of CD assets and what it will mean for your offshore investors and all those things. So even though it will go, I think that the policy, the members are more of conservative, that will be more measured in their level of cut, because let's cut a little bit, let's watch the environment, and then let's respond, because the surety from the governor and some of the members was that we will respond as long as inflation goes down. Inflation is 5.4, the indication that it will go down again to about 4%, up to 4% in April. If you look at the IMF data, if you look at the Bank of Ghana data, we are still going to be within that single-digit band. So if you look at 18%...
Maybe for a while.
For the whole year, if this data or analysis by the IMF, the World Bank, and the Bank of Ghana, they are anything to go by. So it means that we need further cut to stimulate growth, but also be careful about how you cut in your attempt to stimulate growth.
We understand that Courage Buti of GCV Capital has also joined us on phone. I want to pick his reaction before I even go to Alfred, who will be telling us the data side of the whole thing. Courage, if you can see what is going on, the picture and the atmosphere in the room, what is that telling you? What are you expecting?
Good afternoon, and good afternoon to your listeners. I think, like George said, looking at well, before I go, by the way, I'm with GTB Bank. I'm an economist at GTB Bank, so maybe if you want to make that correction.
No problem.
Look at the trajectory, where inflation is, where policy rate is, and then the gains we've had so far. If you look at the outlook and the factors that support the outlook, I think there is sufficient for very significant rate hike. But I also think that the central bank thing possible to make that I thought that was not the money unnecessary or fair guidance that where the next you want that policy. So based on that, I expect that, but not expect that
Courage, we are really struggling to hear you, Courage.
Is it any better?
Absolutely.
Okay. So I'm trying to say that given all of those dynamics, I expect up to a 200 or 250 basis point cut today. And then not that there is no room for a larger cut, but the cautious stance the central bank are taking, the rates that we emerge. Today, food inflation is quite drastically low, and it's because of bumper harvest and it's back.
Okay. Okay, sure. Courage, I would want you to stay with us. We'll be coming to you shortly. Let me bring in Alfred at this point. Alfred, I mean, you know all about time series, and there's a time that time series speaks a lot in terms of prediction, where the data will be, inflation, exchange rate, almost all the key indicators. You need time series. What is your data telling you, and what are you expecting in terms of the margin of cut? George has already given us a background that we should be expecting possibly some rate cut, but the margin we simply do not know. What's the data telling you?
Yeah, I think just like you have all said, I think it's a matter of the magnitude of the cut versus like whether there's going to be a cut or not. Because I think if you look at the numbers, you look at and apart from the headline inflation, you look at the core inflation where you're stripping out all the volatile pieces in the inflation. It is all pointing to declining price pressures, right? And I think that's what the central bank wants to see. You think about what the government wants to do as well, that the fiscal authorities want to do in terms of stimulating growth this year. So last year was stability. This year, we have stabilized the economy. We have mobilized, or we have mopped up excess CDs from the economy. So what do we do now? Now stimulate the growth. So I think those are the things that are going to drive the policy rate decision. And I think that, I wouldn't expect anything less than a 200 basis point cut, because just looking at the data, the Bank of Ghana has a lot of wiggle room in the sense that the 5.4 is below the target band. Right, and so 5.4 is below between 6 and 10%, which is the target band. So that gives the Bank of Ghana a lot of wiggle room. Juxtaposing that with the need to grow the economy, because we know that last year credit growth was not the best, right? When you take private sector credit growth, you adjust it for inflation. There were certain parts of last year where it was actually growing in a negative direction. So the government will want to reverse that. The government will want to be able to make sure that private sector can access credit. And it's even as much as government itself is pulling out of the market, be able to get credit to the private sector. Because if you look at a lot of the government programs, they all hinge on private sector growth, private sector participation in those things. So you think of the 24-hour economy, all the different big push. It's supposed to be relying on private sector. And so making the credit environment good for the private sector, I think is important. And so that is, I think, going to be one of the big considerations that the committee will be looking at.
George is more or less like the cabezoto of policy rate cuts.
But I think we are forgetting one thing, that it is a committee that decides. If it was left with the governor alone, the two governors, it could be, more tight on our analysis. But you have other varied professors coming from outside to the committee.
Absolutely.
And don't forget, the Bank of Ghana will tell us always that it is a majority decision. So it just takes one person to side with you, do the 200 basis point. This is another person who thinks that, no, credit is not good enough. Can we push further down? And there's also those who are the school of thought that it has to be gradual. So the reason I'm saying that anything can happen, but if you want to stick to the data, with the governance, they work with data, the policy rate at this time will see it is going to go down. But also you should be careful also about the signals you send to the market. Because if you cut too steep, don't forget the impact of this on city assets as well.
All right, George, there you have it. The governor just walked in, taking his seat, about to make that big decision. Winston, I mean...
Yes, interesting. Before the governor comes in, George has been assessing the IMF report, and they recently made some assessment on how Ghana has been able to manage the policy rate. George, what do you make of the assessment so far from the IMF's perspective, and we meeting the target and the possible... the president indicated that this year we'll be stepping out of the IMF. What do you say?
You know when you go into a program, the fund, they expect you to stick to the books. But you realize that, and I feel that, listen, people are going to disagree with me, but what has happened to the economy, I think is the IMF and the Bank of Ghana.
Well, so the governor is speaking now. We'll take you live to the Bank of Ghana. Big decision day.
6, and this was to evaluate recent economic developments and assess risks to the outlook for inflation and growth. This briefing summarizes the key discussions and the committee's decision on the monetary policy rate. The global economy proved more resilient than expected in 2025. Growth was broadly supported by fiscal stimulus in some countries, rising real wages amid declining price pressures, and increasing AI-related investments, especially in the US and Asia. These factors are expected to continue to provide a broader support to demand in the near term. Against this backdrop, the IMF projects global growth to remain steady at 3.3% in 2026. Global headline inflation, on the other hand, has gradually shifted towards central bank targets. This reflected a sustained drop in oil prices, lower food prices, declining underlying inflation, and anchored inflation expectations. Based on these developments, global financing conditions have eased considerably in both advanced and emerging market economies, supported by expectations of policy easing by central banks, increased risk appetite, and the depreciation of the US dollar. These global dynamics are expected to be favorable for the domestic economy going forward. Now, on the domestic front, growth recovery gained momentum in the year. The latest data from the Ghana Statistical Service showed that overall real GDP expanded at an annual rate of 6.1% during the first 3 quarters of 2025, relative to 5.8% during the corresponding period in 2024. Similarly, non-oil GDP grew by 7.5%, from 5.8% over the same comparative period. The growth outturn was mainly driven by the services and agriculture sectors. The bank's Composite Index of Economic Activity, or what we call the CIA, registered further improvement in the last quarter of 2025. The index recorded 8.8% growth in November 2025, compared to 1.5% growth in November 2024. International trade activities, credit to the private sector, industrial production, and consumption, these contributed to the improvement in the CIA during the period. Furthermore, the latest consumer and business confidence surveys continue to point to improved sentiments on macroeconomic conditions. Most survey respondents cited easing inflation conditions, stable currency, prospects for lower borrowing costs, short-term realization of industry prospects, and attainment of company targets as reasons for their optimism. Now, headline inflation declined sharply from 23.8% in December 2024 to 5.4% in December 2025. The disinflation process was broad-based and supported by tight monetary policy, fiscal consolidation, and currency appreciation. Inflation expectations across all sectors, and that is to consumers, businesses, and the financial sector, these remained well anchored. The bank's core inflation measure, which excludes energy and utility prices, these also eased, indicating muted underlying inflationary pressures. Growth in monetary aggregates moderated, reflecting the relatively tight policy stance in the year. Reserve money grew by 12.5%, significantly lower than the 47.8% recorded in 2024, mainly due to increased sterilization efforts. And broad money supply growth also declined to 16.5% from 31.9% over the same comparative period. Money market rates declined sharply with the 91-day Treasury bill rate falling to 11.08% in December 2025 from 27.73% a year earlier. The easing of the monetary policy rate by 900 basis points during the year, this led to a reduction of average lending rates to 20.5%, coming down from 30.25%. This supported a rebound in real private sector credit growth to 13.1% from a mere 2.0% in 2024. Now on the fiscal operations for the period to November 2025 reflected continued consolidation. The overall fiscal deficit on commitment basis stood at 0.5% of GDP, significantly below the target of 3.5%. The primary balance on commitment basis recorded a surplus of 2.8% of GDP, compared with a target of 0.6%. Public debt declined to 45.5% of GDP at end November 2025, coming down from 63.1% a year earlier. Now, in the banking sector, the sector recorded a strong performance last year. Total assets increased in the year, driven by growth in domestic deposits, domestic borrowings, and shareholders' funds. The asset growth was primarily reflected in investments, which increased significantly. The latest financial soundness indicators show that the banking sector was solvent, it was profitable, and it was efficient. The non-performing loans, or what we call the NPL ratio, improved to 18.9% in December 2025, compared to 21.8% in 2024, although it remained elevated. Ongoing policy measures that are aimed at resolving legacy loans, enforcing strict credit underwriting standards, and addressing willful defaults are expected to further improve asset quality. The easing of the policy rate is expected to support credit conditions and strengthen financial intermediation going forward. Next is the external sector. The sector recorded robust performance. The year ended with a provisional current account surplus of 9.1 billion, and this was up from 1.5 billion in 2024 and was driven by strong gold export earnings, increased private transfers, and moderation in the services and income payments. These developments, together with high capital inflows, resulted in a provisional balance of payments surplus of 3.98 billion. Gross international reserves increased as a result to $13.8 billion US dollars, equivalent to 5.7 months of imports cover, and this was as at the end of December last year. You can compare this to 9.1 billion, or equivalent of 4.1 months of imports cover at the end of December 2024. Improved reserve accumulation provided the buffers for the local currency. The cedi strengthened against the major trading currencies in 2025 and has remained relatively stable in the first few weeks of 2026. The currency's strong performance reflected favorable global conditions, prudent monetary policy, effective liquidity management, and significant reserve buildup. In 2025, the cedi recorded an appreciation of 40.7% against the US dollar, and this is compared with a depreciation of 19.2% in 2024. In taking the policy decision, the committee, the MPC, acknowledged that macroeconomic conditions have improved significantly. This was supported by the tight monetary policy stance, fiscal consolidation, and significant buildup of reserves. Inflation has declined faster than anticipated. Expectations remain well anchored, and growth has strengthened. With stability largely achieved, the focus of policy now is gradually shifting toward consolidating these gains and supporting stronger real sector recovery, job creation, and improved financial intermediation. The latest forecast and 6 months ahead survey-based inflation expectations, which we monitor, these indicate that headline inflation is broadly expected to be within the medium-term target, barring potential spillover risks from upward adjustments in utility prices and commodity market volatility. GDP growth is expected to remain strong in 2026, with the output gap narrowing. While this may introduce moderate demand-side pressures, the committee, that's the MPC, judged that current monetary conditions do remain tight relative to prevailing inflation dynamics. Sustaining Ghana's macroeconomic gains will hinge on disciplined fiscal policy, strong policy coordination, and targeted agricultural interventions to contain food inflation while remaining vigilant to heightened geopolitical tensions. Based on the foregoing considerations, the committee, the MPC, by a majority decision, voted to lower the monetary policy rate by 250 basis points to 15.5%. The committee will continue to monitor developments closely and take appropriate policy actions to ensure that the gains from macroeconomic stability are translated into sustainable growth. The next monetary policy MPC meeting is scheduled for March 16th to 18, 2026. And that meeting will also conclude on March 18, 2026, with the announcement of the new policy decision. I thank you for your attention.
Thank you very much, Governor Dr. Johnson Pandit Asiama. This is the 120th MPC press briefing, and we just listened to the decision of the Monetary Policy Committee by the chairman. The rate is due by 250 basis points, and the chairman gave us the underlying reasons for this rate cut. We also live on Nova Reports, Ghana Web, NFT, and other radio stations, of course, right on our social media platforms, Bank of Ghana. So we go straight to what we normally do, and colleagues, keep it short, keep the narrative out of it, and just go straight to your question. Yes, so Nova Reports. Thank you.
Thank you very much, Mr. Governor. Certainly, gold as it is has been one of the anchors in our stability story from what we've just heard from you. And I want to find out from you because when you attended the Public Accounts Committee sittings recently, you undertook to provide Parliament with information on the cost implications of the Gold for Reserves program. I want to find out from you today, have you fulfilled this commitment? And if so, could you share those details with us?
Right, so let's have Lord.
microphone. All right. Thank you very much, Governor. My name is Lord Nati. Governor, the 2025 financial year has ended, and now that your accounts are yet to be published, what should Ghanaians expect from that publication, the impending publication? What should Ghanaians expect?
Thank you, Lord. Yes. Now.
Okay, thank you, Governor. Now, my question is on the January 2026 summary of economic and financial data. So, Governor, the gold holdings as of December 2025 was 18.6 tons, down from 30.5 tons in December 2024, and even down from September 2025, which was 37.1 tons. Why the sudden drop in the bank's gold holdings, and what is the rationale behind it? Does it have to do with the rebalancing of the FX reserves portfolio?
Yeah, thank you. Yes, Toma.
Good afternoon, Governor. My name is Toma Agyei from Corporate Guardian Magazine. Now that you are shifting towards supporting growth in the real sector, what is your policy for liquidity in the economy as measured by M2 plus, that is money supply growth, which you kept tight last year to combat inflation? Are you not worried there will be a situation where if you ease liquidity to support growth, it will not feed into cheaper credits for cheaper forex, now that you've achieved those things? And secondly, the other related one is, what is the bank policies or planned policies for making sure that this good foreign exchange position that Ghana is now in goes into restructuring of our production processes to improve local value added, rather than just import of more consumables which have become cheaper? Thank you.
Toma, can you repeat that last part? I lost you somehow.
Oh, sorry. The second part was, what policies is the government the Bank of Ghana putting in place to ensure that the forex that it provides itself onto the market is used primarily for restructuring of production processes to increase local value added in our production processes, rather than just importing more consumables for which they are imported, for which they are local substitutes, so that we actually have some structural gains from the good forex position we're in now?
Yes, thank you very much. Mr. Governor, we've had 5 questions, so then we can proceed with that.
Okay, so as usual, I like to take the last one first. What policies, whether Bank of Ghana has a policy to prioritize our FX intermediation? That's what you're asking. That we should be going more for intermediate goods, etc. Yes, that makes sense. But you know, what we have is a market-based system. Banks, we auction FX to the banks. And so based on your documentation, your bank will effect your transfer for you. Now, when we look at data on our balance of payments, it suggests that intermediate goods imports are holding very strong, and so that is encouraging. But yes, I agree with you. We should be moving less of consumption, imports, moving much more towards intermediate and capital goods imports. But as to whether we should be targeting these from our end, I'm not sure. However, the data shows that consumer goods imports are lower than the intermediate goods imports. The director of research is here. If you want, he can show you more detailed on that after the press conference. Then the next one, our easing whether this will not fuel cheaper credit and others, and inflation. Well, no. If you notice throughout the policy statement, the MPC statement, we kept talking about tight monetary policy conditions. Throughout last year, yes, we were easing. However, we were sterilizing at the same time. And if you look at the data in terms of sterilization costs, you see that we were not loosening the anchor, even as we were easing. That will continue to be our policy stance. We need that stance to be able to hold and protect the gains. But that said, you also need to support real sector growth. And it is encouraging. We are beginning to see banks move towards lending to the private sector. We are seeing some reduction when it comes to lending to the public sector. That is encouraging because that is real financial intermediation. That is what supports growth. And we are seeing that sign. What the MPC is doing here is to reinforce that transition. It's good for growth. It is good for poverty reduction in the end. Then there was one other question. The gold holdings going down to 18.6 tons. At the last MPC, I remember we spoke about a rebalancing of our portfolio. And what we did was to look at our peers, our peer countries. We observed that most of them were holding between 20 and 25% of their portfolios, as gold. At the time, we were holding a little over 40%. And so decision was made to diversify, and that is what you see. But the FX that was earned as a result is there. It is earning, dividends. And so it is contributing to reserve accumulation. And so no worries at all. And as you are aware, we are building all the time. We are rebuilding all the time. And so this year, we will reaccumulate once again. We'll be down to that level. And we will ascertain, we will evaluate whether it will be optimal to hold it at those levels. And maybe let me just clarify. It is true gold prices have risen to record levels, way above 5,200, I'm told. You have to understand that there are several factors that drive gold prices. Some of these factors are transitory. Some are structural. Now, what you see at 5,200 may be more of transitory factors. It may not be permanent. And so you have to be conservative in your assessments. So we will be guided by what will be optimal based on the structural considerations and determine the appropriate levels of holdings that we want to go for. But let me add that our reserve accumulation is upward. Nothing has come down. It was just a rebalancing that we did. Then the next question was on the 2025 accounts, how it is turning out. Well, as you are aware, we have our mandate. And you also know that the Bank of Ghana is not a profit-making institution. Our mandate is to ensure price stability. Our mandate is to ensure financial stability. Now, in carrying out this mandate, yes, you will incur costs, but then that cost has to be put in proper perspective. And so you will see in our accounts when it is published that, for example, the cost of monetary policy operations, is quite, significant. And then you also have things like revaluation costs, they are also there. And not to talk about our good friend, the gold-related expenses. These are legitimate costs that you incur for the public good. But that said, we are in consultations, just as I mentioned at the PAC meeting when I went there. We are in consultation with government, with the Minister of Finance. And you would have heard that when we amended the Bank of Ghana Act recently, there's a provision in there for government to recapitalize, the Bank of Ghana from time to time. And so government is committed to recapitalize us, or more or less to strengthen our balance sheet, going forward. And so rest assured, we will ensure that we remain policy solvent. We will ensure that we are committed to a mandate. We will ensure that we serve the public good. In so doing, there will be cost. But government and the Ministry of Finance, for that matter will do its part to help shoulder some of those costs. Now, the gold, next one was on PAC, regarding some data that was required when we went to the Public Accounts Committee. Rest assured, the PAC chairperson was asking to see some explicit data in their accounts, but those data were captured in other areas in the report. And so we have provided those numbers to them about a day or two after we left there. If you want to see the details, I encourage you to approach the chairperson of PAC. They'll be able to share with you. But as far as we are concerned, that issue has been addressed, and that is behind us. Bernard, I think that is the end. I think I've answered all 5.
Yes, Governor, that's the end of the
so we can go on to the next one.
Yes, please. Right, so we're also live on Joy News, and if you've just joined us, this is the 128th MPC regular meeting press briefing, and the monetary policy rate has been lowered by 250 basis points to 15.5%. And you just heard the governor explaining a few questions that have so far come up. So the next round of questions, 5, 8, yes, go ahead.
My name is James Channel with Joy News. Now, with this cut, Governor, I want to know, we've seen the CD depreciate, seen the marginal depreciation by some 4% in the month of January. My question is, should we be worried based on this? And also, should the market interpret this cut as the beginning of a sustained easing cycle?
Yes, thank you. Please go ahead. Bloomberg.
Can you please hear me? Yeah. All right. Thank you, Governor. I wish to ask a quick clarification on the bank's gold holdings. If you say you diversified, does it mean you sold the gold for cash? That's my first question. My second question, last year you introduced a new FX intermediation where you sold dollars on the spot market to market players. But some people are complaining that the allocation is not based on the highest bidder principle. Is that a case, and what is the strategy behind it? And number 2, right now it looks like none of your instruments are linked to the monetary policy rate. The 14-day is around 14.5%, and overnight rates are being placed at 14%. So you look at the gap between the policy rates and your instruments. What is the strategy behind it? And are you concerned about policy transmission? Thank you.
All right.
Good afternoon, Governor. My name is Morris with GTV. So with your latest rate cut, will you say that you are likely to, earlier than expected, achieve your target of reducing interest rates to not more than 10% by the close of your tenure? Thank you.
Ms. Governor, I think we've had 5 questions. Okay. Moses decided to take other people's questions by giving us 3. But he's forgiven.
But can we have the last one again? I lost the last one.
Right. He's saying that with the policy rate cut, are you on course to achieve your target of 10% lending rate? Yes, please.
Right. Then maybe I should take that one first. So, yes, we are very much, and let me explain that is not an official commitment. That's my own personal, wish, my personal aspiration. Why? Because I have seen very high lending rates all my life, from when I joined this institution in 1995. Lending rates have always been extremely high. It is my personal dream to see a reset in terms of lending rates. So it's just my own personal commitment, not an official one. And I must say that we are on course so far. Someone this morning was telling us that his bank called him and invited him to apply for a loan at 15%. 15%. A year ago, you were talking about over 30%. And then it is significant to know that banks are now beginning to call clients and asking them if they needed any loans that they could come and apply. So there's a shift, going forward. Now, if I can go to the first one on the depreciation of the cedi, it is very much in line with the framework that we have. I mentioned that what we have is a managed floating system. What that means is that you allow the exchange rate to adjust to shocks. It's part of the process. The cedi must move up, but then it must move down. Our objective is to ensure that the volatilities are not excessive. And so don't get worried if you see the cedi moving a little bit. It is normal. A number of factors, impact the cedi at any time. There are short-term factors, uncertainty of any kind, speculative behaviors, some noise in the market. Those can just move the rate, not because anything is wrong. If those movements become persistent, then you might notice maybe factors such as high monetary growth. If that happens, that could also impact on the cedi. So what is happening currently, we believe is more of the short-term kind of, factors, uncertainty, etc. But it will fall in line. We are observing the trends. We are working. Our financial markets is on top of the job. We announced a number of reforms in the financial markets last year. This year, we are going ahead with further reforms. The interbank FX market is working better now. And so we believe that FX intermediation will become more fluid going forward. And so the cedi should be relatively stable going forward. Then the gold holdings, you're asking if it was sold for cash. It was sold for FX. It was sold for FX and it was invested. So it was invested, adding up to our reserves accumulation, and it is earning interest, therefore. And so rest assured, it's very much a part of our reserves accumulation. Then there was one question about selling dollars on the spot market, whether the allocation was based on the highest bidder or not. I would refer you to the head of the financial markets department after the press conference. Those of you that are interested in how our auction system is working, Gershon, can you wave so they see you? After the press conference, I will encourage you to have a short session with Gershon. He will take you into the details. Then the Mozart's question, 14-day, around 14.5%, and whether our policy transmission is working. Well, very much so. Our policy is working. At the last MPC, we announced the introduction of the 14-day. We provided reasons why we decided to discontinue the use of the longer dated ones. And so far, by way of liquidity management, we think that the 14-day is working appropriately. We are reviewing, its performance. And so those instruments will continue to play a strong role in our liquidity management effort. But again, Mozart, if you want to discuss this further, you can join the same group, after the press statement. Mr. Gershon is ready to take you into greater detail. Now, Bernard, again, I believe that covers all the 5 questions, unless I left out something.
Yes, Dr. Asiama.
Okay.
Right. So we go to the next round of questions. This is the penultimate round. And after this, we take the last round. But before we do that, let me say that we have with us also the members of the Monetary Policy Committee here. And as you are very much aware, we submit their underlying reasons for whatever decision they came up with right after the MPC meeting as well. So you get to hear from them, but on paper. And also we have with us here the advisors to the governor. They are all part of this meeting. So please, let's go to the next round of questions. Yes.
Hello. Yeah. Good afternoon, Governor. My name is Francis Into. I work with the Ghana News Agency. I would want to know if all banks have met their capital requirement, considering the fact that regulatory forbearance has expired and capital adequacy ratio remaining at 17.5%. My second question is on the gold purchase program, the domestic gold purchase program. What pragmatic steps is the government, for that matter, the Bank of Ghana and its stakeholders taking to reduce the cost that the country continue to incur? Thank you.
I am New Lati from 97.3 CTFM and Channel 1 Television. Governor, I just heard you say that the government is committed to recapitalizing the Bank of Ghana from time to time. I just want a bit of clarity here because I know the finance minister has said that government is not going to bail out the Bank of Ghana and that the central bank should find its own assets in recapitalizing and also restoring its balance sheet. So I just want to know if the government has changed its position or what form and shape this particular recapitalization is going to take. Is it that government has changed its mind or the Bank of Ghana is still going to find its own resources and recapitalize? I just want to know what the government stance is now. Thank you.
Okay, my name is Emmanuel Bruce from Reuters. Inflation is now 5.4%, which is lower than the central bank's target band. I want to find out if the central bank has any immediate plans of reviewing your inflation targets, and then also what's your inflation target for the year. Secondly, the Financial Investment Trust, which is wholly controlled and owned by the BOG, owns the majority shares in ADB Bank. Government in the 2026 budget announced that it was going to recapitalize ADB. I want to find out what would this mean for the shareholding structure of ADB, and also when does the central bank plan to list those shares back on the stock exchange, because the continuous holding on to those shares makes the central bank a regulator and a player at the same time.
Right, so 5 questions. We'll come back for the last one. Dr.
I had 3, unless I missed some of them.
Okay, so there was the government recapitalization of the BOG,
yes,
which is a follow-up.
Okay, yes. So out of the 23 banks, we have about 21 of them meeting the capital, recapitalize, the levels that they were supposed to be at the end of December 2025. We have 2 more banks that are yet to meet it. But those banks have been given up to March, end of March 2026, to be able to meet it. And so largely we have made progress on the recapitalization strategy. We are monitoring to make sure that all banks are able to meet it by the end of March this year. Then the gold purchase program, what are we doing to reduce the cost? We've been having a number of meetings with the finance ministry. We are coming up with a number of reforms, as I mentioned when we went to Parliament. I mentioned that we'll hold consultations, and that is going on very actively. Hopefully very soon there will be information, there will be some communication on the way forward. So rest assured, as I explained, the domestic gold purchase program began somewhere in 2022. It was introduced as a crisis management framework. And so as any framework that is introduced in the midst of crisis, you would have to tweak, the framework. We had to close down some aspects. We have had to introduce, features, to strengthen risk management. We have had to reduce part of the cost. But it's about time we go further to reduce it even more. But we think that the G4R especially, it holds promise. Once we reform it, it should be able to support our reserve accumulation. And let me also mention that there's an audit that is ongoing on the gold for oil. Remember, we canceled the gold for oil early last year. We canceled the gold for oil. The goal for reserves is also going to be audited. And so rest assured, we will look into everything to make sure that the framework is streamlined. Then recapitalization of Bank of Ghana. So I mentioned that the Bank of Ghana Amendment Act was passed barely about a month or two ago, where it is stated there explicitly. And so I believe in the commitment of government. So far, we have had some fruitful discussions with government. They are going to help support, to repair the balance sheet of the central bank. Remember, it started from 2022 when the domestic debt exchange program, came in. The central bank had to take, a chunk of that task, all in an attempt to protect the country. And so it is only fair